The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 22nd, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be a pioneer of our future versus a prisoner of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Please, in that subject heading, put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Thirsty Thursday, terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 425 points, down about 1 7/10%. S&P down 1.5% or 41 points. NASDAQ up 1 7/10% as well. That's 117 points to the downside. Russell up just under 1%. That's 14 points, trading at 1564. Semis are done nearly 2%. That's 27 points. New York Stock Exchange off about 1.5%. Composite the same. Wilshire the same. Tranny's about 1 7/10. So in the red to the downside across the board. You do have the spot volatility index. It's at 108 in the afternoon, up 17.8%. That's $3 and change out there, trading at 2105. It is above the 50-day exponential moving average, but we may have a one-day rate of change greater than 10%. We'll certainly check in on that set of tools out there during the day. Silver's off 5 pennies. You've got gold trading out at 13.25. Light sweet crude off 69 pennies, trading out at 64.48. Equinix is the leader to the upside, dollar-wise. That's $6, not a big deal. MGP Group up $6. That's about 7%. Guess Inc., GES, they're up about $4 or 28%. That is a big deal. Land's End up 26%. To the downside, it's Google, $32. That's a little less than 3%. I mean, just less than 3%. Amazon down nearly 2% or $28. Nettie's off 16 bucks. That's 5%. ABVV down 13% or 14. Of course, I want to look at what you want to look at out there, and I'm not sure what that is. Actually, there was a question. The SMH is right. That is one of the ETFs for the semiconductor indice, and a subscriber had sent in an email earlier. I just saw it just before I came on the air. Now, the SMH is, I don't think it tracks exactly the stocks out there, but it's close. And the question was if we could take a look at profile levels out here. The subscriber was looking for the profile levels inside the actual index. And as I indicated there, what we really have to do in that instance, because we don't have an equity futures contract to go to, we just simply want to go ahead and take a look at the ETF structure. So here we've got the daily, the weekly, and the monthly. Hey, Denners, isn't there another ETF as well that tracks the semis a bit better? Maybe you know. Either way, I think we're in pretty decent shape right here. Here's what we know about the SMH at this stage. Prices come down and tested the bottom of its TAS market profile on the daily chart. That's 107.50. We haven't tested it exactly. We're close enough for our game. That was 107.66. Volume so far today, about 2.6 million shares. That's really coming into an area where it broke out with about 4.5 million shares. So we'd have to say it's coming back with similar volume. It's not blowout volume. If we take a look at the trading session from 4 days ago, that was 7 million shares. That could be a B point of an A to B equals CD, but this is trying to close below that level of 108.11. You're at 108.50. So we've tested that so-called B point. That's going to be a test on light volume. If this holds 107.50, you're okay. At least that's what would be my read, and take a look at the SMH to give you a decent feel for what the semis are doing out here. If we took a look at the monthly chart, there's no problem whatsoever there. If we take a look at the weekly chart, there is also no problem here. We had a nice big breakout. This was the week of March the 5th as this went down. Well, it didn't actually make its all-time high then, but a nice wide-ranging bar, 20 million shares. The next week it makes a higher high with 24 million shares. We're just trading inside that. So intermediate term, long term, I don't see a problem inside the semiconductor index. And on a daily basis, that little key reversal session that formed out here on the trading session of 313, that said, okay, time is up for me to go ahead and make a little bit of a retracement. It looks like that retracement may be done. That's if we go ahead and use the SMH as a guideline for what the semis are doing out there. I hope that that helps you out with regard to the semiconductor index. I've worn out that carpet. Let's go take a look at what's going on underneath the covers of the S&P 500. Let's take a look. Let's begin by taking a look at the XLK. In the case of the XLK, and this is where I like to go ahead and take a look at some volume analytics, because what we're doing is we're trading back into a swing point. So I don't want to get too focused on just the S&P 500. Instead, I want to take a look at what's going on inside each of the sectors. So we begin with the XLK, the technology sector. Absolutely doesn't look good from the standpoint that we've got that island top. That is that yellow rectangular pattern out there. That says, okay, it's bearish. Now, the interpretation has to be, okay, you're going to pull back to where? Always our first target to the upside or the downside is going to be a prior swing point. In this case, that happens to be March 2nd. Let's go see what's happening today versus March 2nd. Today, we've got volume of 9.6 million shares, pulling back into 19 million shares. So we've been trading 9:30 to 10:30, 11:30, 12:30, 1:30, 4 hours. There's only 2.5 left. Multiplying this time 2 would be disingenuous to come up with a volume. So the XLK is pulling back with light volume. Does that mean you go ahead and you buy the XLK now? I think the answer is no. Of course, I said I think the answer is no. And the reason is because I need to go check out, hey, what's the XLK doing, silly? And if we take a look at the XLK, what did I mean by that? Well, let's take a look at what the market breadth is doing. So if we're going to use as a meter the daily time frame chart, you can see this little up and down crosses out here, very right-hand side as we're taking a look at it, says consolidation. Okay, so that bodes fairly well that you're not going to bust out the lows, or doesn't appear that you will. If I look at the weekly time frame chart for the XLK, no problem. Right? The XLK, when you say, what do you mean? Right. Well, when I take a look at the XLK, it's almost just like we looked at the semis out there. You have more issues trading above the top of a weekly profile. That's 35 versus below 9. Hey, I hear the music. We've got to go to break. But I'll be right back. I hope you will be as well. Steve Rhodes from TFNN. You don't buy into that nonsense, do you? You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
In Tom, I happened to fill in for Larry this morning at the 9 o'clock hour. Always a lot of fun. I always enjoyed doing the 9 to what turned out to be 9 to 11 hour out there. So always nice to be back in that driver's seat, because then, especially on a day like today, where you've got things moving out there, we go take a look at the futures contracts, see what they're doing, look at patterns and so forth. And in the case of Tom, he likes trading that volatility ETN out here, the TVIX. And what I had shared with him is the pattern that I've identified that seems to work the best for this is take a look at a short-term chart, 2-minute, 3-minute, very short-term, and take a look at the different TAS market profiles that it has out here. And he was in a successful trade. He got out at around in the 8 to 9 area. We can see right now it's trading out at 862. Tom's back in on a position at 836. So, Tom, here's what we know right now, just using that same 3-minute time frame out here. You're in at 836. The bottom of its 3-minute profile is $8.30. Now, this profile here is pretty much equalized, equal. It's neither tipped to the bulls or the bears out here. I mean, the center at 852 is pretty much in the center of the box, 873 being the top. So you know you've got resistance at 873. You're long this, you want to see price be able to take out the 873 level. That would then be short-term bullish view. I don't know where the next profile is going to form out here, but that in essence is what you'd like to see. If it can't bust them to the upside, may try to bust them to the downside. Maybe in a range out here as we speak. 3-minute profiles are going to change, you know, more rapidly than obviously a daily and so forth. 830 is a level of support. 873 is a level of resistance. It's the best info I can give to you right now. Yeah, you had successful trades. Just put your stop at 836 or 830. And it seems to me like, you know, that would be the That would be the deal. So I hope that that helps you out. Thanks for listening this morning as well as this afternoon. Want to make sure that I get to anybody who writes in. I certainly want to make sure that I get to each of your questions here. We've got one from Ken. Ken says, Steve, would like an exit target on Siri and then also an entry price on unit? A double question out there. Well, we're going to give you a double answer out here. I will not be able to be with you tomorrow, so if you do have some questions, please go ahead and write in, call in, whatever it might be. Siri is the question out here, and we'll take a look at it. And the question was, what's a price target? So what we're seeing here in Siri, first we're just beginning with the daily, weekly, monthly time frame charts out here. Monthly looks nice. Monthly, let's just take a look at Siri on the, when I say it looks nice, I apologize. Whenever you open up the chart, then you're like, oh, kind of nasty out here. I don't know if this was reverse splits or it really sold up at the $70, $68 level. You're at $6. Let's just look. When I say don't let your be a prisoner of your past, okay, instead be a pioneer of your future, folks, that statement can be used in life, but it really needs to be used in trading and investing. You cannot be a prisoner of your past. You're going to make a trade that doesn't work. You just need to use stops, exits, both sides of the trades out there, and your last trade was just simply your last trade. You've got to be a pioneer of your future. If the system you're using isn't working, then you take a deep breath. You find a better system. You try to figure out what market you're in and so on and so forth. And in any event, out there, if we take a look at this monthly time frame chart out here, what I see as a swing point of relevance that I would use would be October 2013. Just curious if that was passed with volume. That had 1.2 million shares. It was passed with 1.2 million shares. That kind of works. So, longer term out here, just looking at the monthly chart and off the bottom, what Siri is saying to you, there's a couple A to B equals CD patterns. One gives you a price projection. Yeah, you're slightly above that. It would give you a price. You want a price projections. It would be about 752. That's one A to B equals CD. Let's use another A to B equals CD pattern in the longer term time frame. And that didn't work real well. Let me see if I can actually tag the proper area. Come on, work with us. We're live. There we go. There's your A point. Here's your B point again. October in 2013, April 2014, your C point. 711 to 823 when I take a look at the larger term time frame, the monthly out here. If I look at the weekly, do I see any problems with it? No, not as we take a look at it. The last time this thing took out a swing point, there was 173 million. It was taken out with lighter volume out there. Does that matter? No, 122 million. I take that back. So you did pass a swing point. It was accelerating to the upside. I don't see a problem. If this pulls back, this would pull back into about the $5.63 range. Let's take a look at the daily. So now we're getting to much more short-term trading out here. And the daily shows a bearish structured profile. Bearish structured profile means that the center line at 651 was closer to the top at 658. Price was able to, or sellers, that's what it was saying when we say bearish structure, we're able to push price down to the level of support. The level of support was 632. You're trading at 633. If it closes under 632, the message is that this would want lower price out here. And by lower price, lower price, you've got to go with, you don't have to, but I would go with 565, 563 as the number. You also want to take a look at unit. Now, I don't remember what you asked for in unit, and if I open up the email, there we go. You want an entry price on unit. Interesting. So unit, which is Uniti Group, no idea what they do. It looks like we're looking at the exact same chart. Sheesh, it sure does. But in any event, we're not looking at the exact same chart out here because we're seeing that this has a bearish structured daily profile. Price was able to push down below it. It's trading right at that number right now. Bottom of that profile is 1668. We're trading at 1668. If this closes below 1668, then your entry prices on this, you've got two of them, you'd be looking at 1564 to 1442 out here. That's what I would be looking at inside of this equity. Did this complete on a daily chart in A to B equals CD out here? It looks like it did. And so if this is coming off of its bottom, what you're going to be looking for is, hey, what is this thing going to do? Whoops, gosh darn it. And I didn't mean that about you. I meant it about me and the mere fact that I didn't point to the right spot. So this completed the 1-to-1 A to B equals CD. The buy or sell the D point. It gave you the sell the D point. That was on March the 19th. Now it's pulling back. If it breaks below support, what I would be looking at here would be some type of retracement. And if we take a look at those retracement options, let's go do that for you to also give you some price targets to look at. And what you really wanted to see inside this equity that I don't see in taking a look at it right now is you really wanted to see a sign of strength off of the bottom. You didn't get it. And a sign of strength being wide price spread, accelerated volume. Let me pull it in a little bit. Do I see anything? I don't see it. So for an entry price, I'd be watching for the 1528 to 1469 type area out here for unit. Make sure this continues to pull back on light volume. So thanks for writing in. That was for Ken in Wyoming, and I hope that helps you out. Great. We answered the question about the semis out there, so we got that one clear. Looks like the phone lines are open. That includes the email lines as well. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, question that was asked of me is simply whether or not the 30-year Treasury may have actually topped today. So, to answer that question, one of the things that you and I want to do is go back and take a look at what the 30-year Treasury has done since since the Fed has started raising its Fed funds rate out here. And that began on December 17, 2015. So we've had 2, 4, 6 interest rate rises since then. And that's what this chart is showing. So each of those dates were Fed meetings where the Fed funds rate was increased by a quarter point out here. And what we have seen as we analyze this chart is we've seen that the initial knee-jerk reaction of the 30-year is to actually trade higher, meaning that the rate for the 30-year has actually come down. That's what occurred on December 17th. That's what occurred in 2015, December 14th on 2016, March 15th, 2017, June 14th, 2017, December 13th, 2017, and then yesterday. Now, with regard to, we can also see that there are instances here where price then, when price has gone back to a prior swing point, sometimes it breaks out above it. A breakout, you want to see a swing point get taken out here. Well, earlier in the day, price got up to the prior swing point, which is why I said, yeah, maybe it did, in fact, top out here. Let's take a look at it. But this is the first place to understand that what we've seen unfold today in the 30-year Treasury is consistent with the way that it has behaved from the time period that Fed funds rates have increased. That doesn't mean that this can't bust it out to the upside. And I can give you 2 trillion reasons why the 30-year bond could actually move higher and rates could pull back. But that's neither here nor there. We won't get into Steve's fundamental information, and some of the information that was shared with me was confidential, so therefore I won't share it. It would not be appropriate out there, but I do have 2 trillion reasons why. But let's just try to answer the question with regard to what's going on today. If we take a look at the market profiles out here, one of the things that you are going to see, let's kind of hone this in. We hone this in. We're going to take a look at, well, first thing that I like to do this, it makes it easier, especially if you're watching in on your mobile device out there, is to take a look at the current profile for the daily time frame for the 30-year Treasury. You're going to see that there was a brand new profile formed on March the 19th. Today's March the 22nd. We can take a look at that profile, and we know that it has a bullish structure. It means the bottom, 143, even Steven, should hold as support. Doesn't mean it will. Says that it should. Means that if you have a reason to believe that you're going to see the 30-year Treasury bounce, that's what you're looking for, is a 30-year get into that and reject that level. That's what it did yesterday. It did it like right to the T, or within 1 or 2 30-seconds of that. What did price do today? It hit the top of the box. Look, it moved just beyond the top of the box, which was 145.11, but not much higher than that. It got up to 145 and a half, 145.16, 30 seconds out there. And price since has pulled back. Test the prior swing point. Pulls back out here. Now, I don't have volume statistics enough to tell you whether price is going to be back up there. I don't have reliable volume statistics in order to do that. So we're not, even though there's volume at the bottom of this page, I'm not going to rely upon that information. We do know that resistance was hit with regard to market profiles. What else do we know? Well, what else we know is that if we take a look at the prior way, the way that markets squawk, walk, and talk to Steve-O is with regard to Japanese candlesticks. Oh, I grabbed the wrong chart. That means we're going to discuss the wrong thing. Let's go back and grab the correct chart. And what I'm going to show you is you're going to see where the last bearish reversal candle formed. Happened to be where we had that last swing point. You had both a bearish engulfing and a 3-river evening star out here. That said that was resistance. So to answer the question, could the June contract for the 30-year Treasury have topped out? What we do know is it hit resistance. and a couple of different levels. And so for it to pull back is not out of the question. If price closes over the high of March 16th, closes over the top of the daily box, what you then know is price is going to move higher to where you'd use A to B equals CD patterns retracement, things of that sort. You could even use Tom DeMark system that would say it's not out of the question to get up to 147 in the 147 area. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you doing today?
Great, Steve. Thank you for taking the call.
My pleasure.
I was looking at the S&P 500, and we see a short-term bottom there today at 2665, and it's starting to bounce back. I just wondered what your thoughts were. Is that significant, or is this I just wonder what your thoughts were on the 500.
So I would anticipate that the ES Mini is going to test the 2697 level. And that's in looking at a 30-minute time frame chart. And on the 30-minute time frame chart, that profile, I'll just simply go ahead and expand that on the screen so that that's the only thing that we're looking at. And I'll turn off price just for the moment because this will help to answer your question. I'll let the market answer the question for you versus me because that's where we're really going to take our cue. And the box that is formed here, this was in the past hour, is a bearish profiled box. So the 2697 level should be the extent of the counter trend rally if the market is going to go ahead and close towards its session lows out here. And that's because it's a bearish structured box. Closing over 2697 says, and I would give it a little bit of room, and that little bit of room would be up to about the 2704 level. So 2697 to another 5 points at 2704. You get above 2704, then it's game on all the way back to maybe 2723 or even higher than that. I would also be trying to take my Q, Ron, from the NQ. My Q from the NQ. And the reason is, and we should take as first, any questions about that?
No.
Okay.
Well, how about on the downside if it were to break this 2663 or so?
Yeah, the downside
on the mini.
Yeah, the downside on the mini right now for me is still probably the March 2nd swing point low. And we'd have to do some more work on that and really take a look at what's going on inside, volume-wise. But I would say the 2652 level right now would be my downside target. So upside, you get above 2704. I think this thing can run higher. Like I say, though, let's not just let's take our Q, so to speak, from the NQs as well and see what they're doing because the NQ should bounce to 6822. That's going to be the first level that provides us with a piece of information. That's also the top of the, well, let me take that back. Hold on. That's a 60-minute time frame chart. I want to give you the 30-minute. I want to give me a second here to change that. And the 30-minute time frame says 6821 is the number where this could bounce to. And if we take a look at, so on the short term, this gave us a nice bottoming signal. And it did that because price was pushing lower into the 12 noon time frame. By 12:30, it had a nice bullish reversal signal, big bullish engulfing candle. Price closed above Stevie's red line. That's that oscillator on change line. And unfortunately, Ron, you're going to have to wait until we get back from this break. There's nothing I can do to change time. Is it okay? Would you wait?
Sure, no problem.
Okay. We'll be back with Ron. We'll try to figure out what the markets are communicating to each of us. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're on the line with Ron in Denver. We're taking a look at both the ES and the NQ out here. Now, Ron, one of the reasons I forgot to mention is that the ES should at least target those higher levels that we were looking at. Is if we take a look at what's going on inside, and it was a 30-minute chart that we were looking at out here. And as I take a look at the market breadth from a 30-minute standpoint, it's very bullish. Right now on 30-minute profile levels, we've got 294 of the, in essence, the 500-plus issues trading above the top of their 30-minute profile, and only 38 below. So we've got really strong market breadth. So a continued move higher into those resistance levels is what makes sense to me based on market breadth. Now, the NQ, and I don't have the 30-minute profile for the NQ, but what we can see is that price should head up to that 68.21, 68.29 level. On its 30-minute time frame chart here, this formed one of those nice price relative strength divergent bottoms. It says that price ought to be able to get up to the top of the 1030 swing point out here. That's really close to the 68.23 level. So there's another number that coincides with what we're looking for. And if price can get above 68.29, then the NQ is going to run to 68.64. Your question, I would also assume, would be to the downside. What's the downside potential if the market begins to sell off again? And I would have to say that the downside would be about 66.01 for the day. That's below the low of the day, and that gets back to the center of the daily profile area. That's about that. Does that help you?
Yes, thank you very much. Yeah, it answers my question.
What action are you going to take then? Because I mean.
Well, I'm not. I'm still waiting. I think that I want to see. I think I'll wait till tomorrow after the close and see if this thing is holding or not.
Yeah, and, ideally, what you'd like to see, what I'd like to see, is if things closed right here, right now, I'd say that this is a candidate for a bottom. And the reason that I would reach that conclusion is because of where the spot VIX index is trading compared to its 3-month counterpart. And we take a look at that ratio, it's above 1. And that's this chart that we're looking at right now. It's at 1.02. If I take a look at where the trend index is trading right now, it's at 2.01. When you get to 2, that typically gives you at least a counter trend rally. When both of them are above these threshold levels, and those would be the green arrows on my chart, you get a bottom or you get at least a good counter trend rally out here. I don't know where both of these signals finish at the end of today's trading session. But if we're to end right now, you've got all the makings of a bottom. If the market moves to the upside, these two will start pulling back, and I won't have that same signal. So somebody who's looking for a long position, you'd like to see the market finish like this or worse. I hope that that helps.
Okay. Yeah, plus you have kind of like the cyclical, just the market cycle in your favor
Sure.
As far as a counter trend rally.
Yeah.
Okay, thank you, sir.
All righty, you bet. Thanks for calling. That was Ron in Denver, and he just helped really by his questions take you and I through some other things that really one would need to look at. So again, I'll just summarize here, even though this is not the end of the show. We just took a look at really we would add a third thing. A third thing would be that you'd have a one-day rate of change greater than 10%. That's if the market closed here right now. You're up at 11.2%. You'd have a trend index reading above 2. You'd have the spot VIX index versus what its 3-month counterpart, and that ratio, when you divide the two, is above 1. You'd have 3 tools out here that would say, okay, that was nothing more than a move, the type of move that you needed to the downside, a little washout type move, in order to move to the long side of the trade. It all depends on what those tools and indicators look like at the end of the day's trading session. And that's going to be different than it is at 1:46 in the afternoon. But at least you then understand or know a set of tools that you can use to help guide you through what the markets are communicating to you and I. And that's really all that it is. I can't control time any more than I can control what the markets are going to do next. But what we can do is just simply become pattern recognition masters, experts, whatever level it is that you want to attain, you can attain it. I can guarantee you. I can tell you if I can do it, then anybody can do it out there. It just requires you to find somebody that's been able to do it before and then learn from that person. Just as I did with immersing myself with Tom O'Brien and Larry Pesavento and the work that goes behind it. What we get to do with you is we get to compress decades worth of work into hours and days and so forth out there. And that's what my Mastering Probability newsletter service does for so many people, because I try to clearly articulate and share a set of tools that each trader can use on their own to do their own fishing out there. And speaking of fishing, we were taking a look at some of the ETFs. We took a look at the XLK. Let's go look at the XLF out here and try to figure out what it's communicating to you and I. So the XLF, today's volume, about 42 million shares. Last time we were down here, it was with 79 million shares. So it is way light on volume, or it appears to be at 10 minutes to 2. Now it's coming back into the March 2nd swing point. It hasn't rejected the swing point because it hasn't closed above the high, which should be 28.52. You're 28.29, but boy, you close above that high out there. That would be a rejection. Didn't get all the way down to the top of the February 9th level. That had 149 million shares, so you kind of get the picture. 149 versus 78 versus today you're at 41. I don't know what it's going to end up with, but it appears to be less than 78 million shares. Not a lot of energy or continued energy on the drive down when we look underneath the skirt, as Maria said, of the S&P 500 by looking at what's going on inside the sectors. Inside the healthcare sector, let's go see what it is doing. So the healthcare sector has tested the low of March 2nd. That was 11.2 million shares. You're doing with light volume, or it appears to be, because you're at 7.2 million today. So the health sector is giving you a test and rejection of a swing point. It all depends on where it closes. If it closes below 82.17, well, then you've got another story. Now, the healthcare sector, the ideal rejection is it closes above 82.80. Then you will have a twofer, because you will have tested the low of March 2nd, you will have tested the high of February the 9th, and done both on light volume out there. You put that together with a trend index reading above 2, with the spot versus its 3-month above 1, a one-day rate of change greater than 10%, and not too shabby out there. Not too shabby for you bottom fisher women and fisher men. If we take a look at the building materials sector, the XLB, and see what it's doing, pushing down into the swing point from February the 9th, 26 million, 4.4 million shares. Hey, look at all these sectors we're looking at inside the S&P 500. They all are saying the same thing. Light volume as it pushes into important swing points. I don't make this stuff up. It is what it is. If we take a look at what's going on inside the consumer discretionary sector, this has tested so far and rejected so far March 2nd. 7.2 million shares, you're at 3.7. We're not seeing any sectors push into their swing points with any volume. Something to think about. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. What to do. You know, one of the great traders in the world happens to be a member of our Tigers Den. That's John in Philly. And I can't recall the exact date, but it was within the last couple of weeks. It wasn't this week. If it was last week, it was the early part of last week. It probably was the week before that, where he was looking at the 1987 analog, what he believed was the analog pattern that the markets were following. Now, not from the standpoint that he was forecasting a crash, but instead an analog type pattern that lasted for 39 trading sessions. You're looking at a top on August 25th, 1987, down to a bottom that took place on October 20th, 1987. 39 trading sessions out there. Well, trading session 30, and here was the analog as of Monday. It's Thursday. It's continued to follow that pattern. Not really in depth. It was never about depth. It was just following the pattern. And 39 trading sessions from our high on January 26th, I think it was, would get us to March 23rd. March 23rd, I believe, is tomorrow. So what would you and I like to see? What is it I'd like to see? Do we want to see the market bounce out of here right now? What we want to see is we want to see those tools and indicators that we just looked at during the last segment. We want to see if it's going to follow along with the analog and find some type of bottom. You want to see a one-day rate of change greater than 10%. You want to see a trend index reading above 2. You want to see the continued light volume move inside of the sectors, inside the S&P 500, wherever they trade to. You want to see the spot volatility index trade above its futures contracts out there. Those are the things you want to see. And then you want to see some type of bottoming pattern, as you and I have looked at on the short-term charts out there. That would be ideal. Does it guarantee you success? The answer is no. I wish it did. But what will guarantee your success is mastering probability, making sure that you use appropriate stops out there, and then firing away. And don't be a prisoner of your past. Be a pioneer of your future. Thanks for being here, folks. I'll see you on Monday. Have a great Friday and a great weekend. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.